appears as if my internet connection is unstable at this time. However, I'll try and get through this the best I can. I'm going to talk about current market conditions and what I think of open trades, as well as what I'm looking to do tomorrow. We'll talk about tomorrow's watch list as well. As always, if you guys have any questions, feel free to pop them in the box there, and I will answer them as best I can. At this time, however, I'll try and get through this the best I can. All right, so taking a look here at the S&P, kind of a current market condition recap here. S&P is doing what we would expect it to do at this 200 EMA level. It's trading just under resistance, below the 200 moving average, and also that $200 area. It's passing through it with some ease, but there's not a big volume push to get through and move us back up into the 204, 205 area, which is our next target if we can get through this. So definitely at a pivotal area here, so to speak. We did open lower today and close higher, which is a very bullish sign. Where we go from here, we don't know. But the important thing to do is have positions available for both long and short, up and down. We don't really care which direction the market moves, so long as it moves one direction or the other. I suspect we'll test this 200 area for some time before either breaking through or failing and falling back down to the 193 area. So one of the interesting things going on right now is the recovery in oil. We're seeing this big, we're seeing a lot of covering of shorts, and we're looking for our position here to. We have a buy right open on USO, looking to get called out as we get closer to expiration on this. Currently have an average of about 831 on 8,000 shares, and looking for USO to close at March expiration somewhere above 950, and that'll get us called out and help us realize our profits there. We've been in this one for a couple months now. This does look good for a move higher, a little bit longer term here. However, I don't trust oil. I don't necessarily think that it's going to hold up here. It might trade sideways in a pretty big range for a while, but I don't want to keep 8,000 shares in my portfolio while this thing makes up its mind. So our next target on oil is 1050, and then after that it's going to be 1250. Maybe we'll have an interim break at 1150. You can see this little top through here where we slowed some. But ultimately, 1050, 1150, and then 1250 roughly are going to be the targets over the next few months. It would require pretty substantial move in the underlying to get back over this 1250 area here. Could happen. Whether it does right now, I don't know, but at some point I'm sure it will. Anyways, like I said, we got our average here down at 831 off the bottom, pretty low, pretty close to the bottom here, right around here. So we're pretty happy with our position. Looking forward to tomorrow, I have 4 names that I have on watch here that I'm excited about. SRPT, Sarepta Therapeutics. This suffered a big gap down here from back in January. They dropped about 50% and opened much lower, sold off all the way to a low of 10.2, and then now we're trading just under the opening to the gap here, which is a double top under 15. Where's that at? We have a double top here, 1574 and 1578. So really over 1580, we can see this thing break out here. You can see the TAS market map, which is the sideways histogram here with the different colored horizontal lines. This kind of gives us an indication or an idea of how much volume trades at each price area. This yellow line is the area of contention. That's where in this time frame of this chart here, of this sideways graph, we can see that the most volume for this time period has traded at this yellow line price, which is about $13.29. So that's going to be an area of capitulation, a lot of churn right there. So it'll be an area of support or resistance. And you can see it's an area of pretty long-term support through here. So once we get up higher in price, you can see that these lines start to shorten up quite a bit. This is called the squeeze zone here. There's less competing volume for buying and selling. And it would make sense that these are short because this is a gapper, right? There wasn't a lot of trading in this range. So we can expect that a lot of people who shorted up through here, shorted even down through here, and are going to try and short at this 1580 area, are going to look to cover as we move into the gap. So this is one that I want on watch for a move into the gap. Take a starter on this over 15 bucks. Definitely add to it over 1580. Looking for a move initially. We should expect a move to the 50 moving average. When you're out in no man's land, you don't have a lot to work with, so we can expect to move to the 15 moving average here, and then definitely probably up into the 2350 area or so, which is also going to coincide with the 200 moving average. So we could see a move to 1850, 1870, and then 2360, 2370. Short term, that's if we get a complete gap fill. We know that there's a high probability that there will be an attempt made. We don't know, whether or not it's going to completely close. But the point is here is, potentially we have a nice opportunity for a win on our hands here. We will see what happens. This area right here at 1575, 1580 is going to be the spot to watch. So that's on watch for tomorrow for a starter position. Looking at KEYW. Oops. So you bring up a good point. Why does the reason for the gap not have any bearing for the move? So the stock market is forward-looking, right? The stock market does not look backwards. It is all price action is based on future earnings, future potential, and that is exactly why it doesn't matter, because this move right here, when this news came out, is priced into the stock, and that's why it opened up 50% lower. That news is already in play. So going forward, this company, like any other company, is going to try and make money. It's going to try and be profitable. No company's in business to lose money or to go bankrupt. So they're going to keep innovating. They're going to keep trying. Whether or not they're successful doesn't matter, but because of the forward-looking nature of the stock market, because of how inflation works, we're looking for a recovery in this company's stock price. So it does not matter at this point. I mean, unless bad news came out or there's still more news pending, it could have an impact. There's always going to be risk to news, but if we're constantly waiting on news to play out or FDA approval to play out, then we're never going to be in trades. So we know that the news is priced in here from back in January, and now forward looking, we're looking looks like investors are coming back in and pushing the stock higher, and we're going to test this area. Now this becomes a technical setup that doesn't rely on the historical data or the historical news from the fundamental drop that it had here, right? So forward looking, this could be an opportunity if you're a bullish investor in this particular in this particular biotech. This could be a great opportunity. So looking forward is why we are looking forward to a gap fill. We're not concerned about what happened historically. Okay, KEYW, KEYW also on watch tomorrow. This is a lot lighter volume, trades at 330,000 today in volume. We have this nice sharp move up following earnings here. We have a pretty big spike, and it tested and broke through the 200 moving average right here, and now it's breaking the top of this little bull flag that it put in. Second bull flag break here. So we're definitely looking for a move here, potentially back to the 850 area. This is a 50 cent ATR, so we can look for about a 50 cent move on average each day. I'm looking for this over a couple days to return to 850 with $8 along the way as our target. It'll be our first target here. Okay, so I'm definitely watching KEYW following its bullish move after earnings here. It's finally trading back in this big 2015 sideways trend here between $7 and $10.30. It's trading at the very bottom of it right now. So you can see that, right? It's a big bottom, long time period here, traded between 10.30 and 7. So just the first time in a long time since last November, it's poking its head back into this range, and it's broken the lows. So potentially room all the way up to 10.30 over the next few weeks, few months. But we're just looking for the shorter term move here to $8 and then $8.50. And then after that, we'll evaluate our position. So KEYW is on watch for long entry over the 7.30 area. Stop will be at $7. First target will be at $8 and then $8.50. So we have a pretty good risk reward here on this particular setup. Very bullish and very strong. Okay, a couple of reversal setups that hit my scanner today that I've been watching is Autodesk, ADSK. Traded this name a lot in the past with some pretty good success. This thing has put in a move from the lows at 41.60 all the way up to 58.50 today. That's just about a 40% move in a month. So just under a month. So we definitely have this very bullish move to the upside here. Let me draw some lines out for you. We are testing resistance now at the 51 or 58.60 area. 58.60 needs to hold up as resistance. We can see that all the way back here in August of 2014, then again in October of 2014, through here in January 2015, so on and so forth. This 58.60 area has acted as stiff resistance. Very important to understand that previous support will become future resistance, and previous resistance will become future support. Well, this area is obviously a previous resistance. It's going to remain resistance, but it did act as support through here very briefly, and also right here was big support while the stock was trading over $60. So previous support is becoming resistance. We can see this level's been in play for a long time. That's very obvious. So we're looking to short it off that level if we can get higher. It's closed at 58.17 right now. If we can get it to 58.60, I'll start a short position here, and I'll look to add on the move to the downside. Where's my target? My target is going to be just the flip of just the flip. We're looking for support levels on the way down. Realistically, we have a target at 56, and we're going to have another target here at 54, which is also home of the 200 moving average right now. You can see that 56 was support, intermediate support. If I zoom out, 56 acted as support from back here in March of 2015, and that'll be our first target on the way down, and our next target will be 54, which was previous resistance here. It was support through here, support right here, resistance again, and now it'll act as support. So those will be the two areas to get through. Like I said, we're looking to short this off of 58.60. That'll be the start of the move, and this could be timed nicely with the S&P. If we go back to the SPY, we can see that it's testing that critical area also, and if we can get it to come in a little bit from the 200 mark, I think it'll really help reverse some of these short positions. It'll be the catalyst that we kind of need for those. So that is Autodesk. One other trade that I'm watching for a reversal opportunity on is CEB. This one hit the scanner a bunch today because it is ripping higher. From a low of 49.30, it's trading at $61 right now. So about $11 in just a few weeks here. Another 25% move. Once again, this thing is trading just off of major support, or excuse me, major resistance. So if I zoom out here, okay, you can see that there is support here in this area, sort of support here, definite resistance here. And as we go forward here, there's definite resistance. So the 61.50 area is critical for CEB. This is another area where I'm going to look to start a short position at 61.50. If we can get a move higher, and then I will average up or down until I'm full size in the position, and it's trending in my favor. Just looking to take a small starter on this. Once again here, the targets are going to be on the way back down. The pretty obvious areas for support. We're going to see some support right here at the 58.60 area, not very far away, but it is going to be an area of support. It's also a little bit of resistance through here. And then potentially we're going to see another area at the 56.20s, 56.30s area. And, you know, if we really get a heavy trender, we'll get down to 54.30s and we can get 7 points on this trade. Am I going to hold for 7 points? Probably not. I'll probably be out after a couple. But the possibility is definitely there. And so that's what we're looking for. Very similar setup to Autodesk. Again, trading off big resistance. We know that in the past it's failed. Look at the last time it hit this resistance spot. It made new lows on the year. So, you know, whether or not that happens again, I don't know. But this is the kind of price action we're looking for here. We're looking for that quick rejection. If it breaks through on a lot of strength, then it's not ready to come in yet. We'll wait for a better exit indicator, or a better entry indicator, entry signal. Other than that, those are the 4 trades I'm watching for tomorrow: SRPT, KEYW, ADSK, and CEB. You know, we have a ton of open positions right now. We have an Iron Condor on URBN. We have one on Twitter. We have spreads on Twitter, Solar City, CLX, VXX, USO, IBB. I have a ton of open positions right now. Most of them are spreads, though, so they're lower risk, smaller size, higher probability. But we'll see. We'll see about tomorrow. Putting on another few trades here. Looking to get in some stocks on these. These aren't the most liquid options traders, so they'll all be with stock. If you guys have any questions, as always, you can email me, jeff@warriortrading.com. Always happy to answer your questions. I'm going to upload this video on YouTube, and I encourage you guys to share it here or on YouTube. And like I said, if you have any questions, shoot me an email. Other than that, I'll see you guys all tomorrow afternoon for the watch list on Wednesday we'll be building. Have a good one.